Okay, you welcome back. Let's forge ahead in under capital allowance. Let's move on. At this point, we want to look at another aspect. If you go through the outline, my outline up there. Let's go over the outline. Let me see the outline. Let me have a review of my outline. And okay, so let's see what we have done and what we have not done. Okay, here we are. Here we are. Definition, gone. Qualifying capital expenditure is taken. Condition for granting capital allowance has been taken. Types of capital allowance taken. Basis period for capital allowance taken. Disposal of QCE taken. So let's look at restriction of CA and terminal capital allowance. Restriction of CA, terminal capital allowance. Let's go for that now. So restriction of CA and terminal capital allowance. Okay, so we are looking at restriction of CA, restriction of capital allowance, restriction of CA. Alright? Capital allowance is restricted. Capital allowance is restricted to 66.2/3% or 2/3 of the accessible profit. Did you get that? Capital allowance is restricted to 66.2/3% or 2/3. They're all the same. The two of them, the same thing. So what we are saying now that where you have accessible profit, remember from the first definition that capital allowance is to be deducted from the accessible profit before subjecting the balance to tax. Remember? Now, we are saying, supposing somebody has 100,000 accessible profit and the capital allowance is 90,000. Are we saying that the whole 90,000 will go away from 100,000 and will be left with 10,000 naira for tax purpose? No. The tax authority is saying no. The maximum capital allowance you can take away, maximum capital allowance you can take away is the lower of, so maximum CA, because that is another way of putting this. Maximum CA is equals to lower of 2/3 of accessible profit. Accessible profit. Are you there? And actual capital allowance. Actual CA. That's the maximum you can take away. Okay? Lower of 2/3 of accessible profit and actual capital allowance. So if you do that, we'll be doing restriction. And then for agricultural businesses, no restriction. No restriction for agro-allied businesses. Agro-allied businesses. Are we there? So that is that. Okay. That is that for restriction of capital allowance. Let's look at terminal capital allowance. Terminal capital allowance. For terminal capital allowance, we are saying terminal capital allowance, CA. There's some capital allowance and some amount of capital allowance that might not be able to be absorbed because the business is in its last year. The business is on cessation. Capital allowance unabsorbed. Unabsorbed capital allowance in the year of cessation is regarded as terminal capital allowance. Terminal capital allowance. What do you do with it? Now, because it is terminal, there's no subsequent years for this company. You cannot carry forward the capital allowance, but you can carry backward. Can be carried backward for 5 years. Backward for 5 years. 5 years. So that's the main issue there. 5 years. After which the capital allowance can be lost, cannot be carried forward. It will go off. We will not make use of it again. So that is that for terminal capital allowance. Let's go over to second-hand building as dictated in the outline. Second-hand building. What is special about second-hand building? We are saying, remember, under initial allowance, I said initial allowance is granted on second-hand asset except second-hand building. Except second-hand building. So this is the point here. Assuming I have these two buildings, they are buildings and they are both second-hand. How? I built the A house, so call it A and B. A, and never put it to use for 1 day. And I sold it out to you. You agree with me that it's a second hand. The B odd is that I built it and used it maybe for 4 or 5 years and I sold it over to you. It is still second hand. So these are two second hands. So we are now saying, if it is A, because I have never put it to use, it will be entitled to initial allowance. Are we there? It will be entitled to initial allowance and of course annual allowance for A. Never been put to use, both being second hand. But for B, because it has been put to use, it will not be entitled to initial allowance. Are we there? It will not be entitled to initial because originally the original owner, when they first put it to use, will have claimed initial allowance. Then your annual allowance, for your purpose of computing annual allowance, is going to be, of course, there's a cost you use there. Remember AA formula. The cost will be the lower of cost of purchase and the original cost of construction to the owner. The cost, the amount you are going to use is the lower of the cost of purchase, that's buying from the original owner, and the cost of building to the original owner. The lower is the cost you will use in computing that. Okay? Having said that, let's go to the last part of that outline, and that has to do with hire purchase transaction. Hire purchase transaction. For hire purchase transaction, we are saying, okay, hire purchase transaction. What are we looking at here? All the while we are talking, we are believing that all the purchase, the assets were acquired on cash basis. Supposing a business wants to acquire an asset, but because of cash flow problem, cannot go for it outrightly. It can acquire the asset through hire purchase. Are we there? Hire purchase. We're all familiar with hire purchase. So what is the peculiarity? The question now is, if this asset are acquired through hire purchase, how do I compute capital allowances for this asset? Are we together? And know the nature of hire purchase. Because of the peculiar nature of hire purchase, where the hire purchase price usually include element of interest, isn't it? Of course, if an asset should cost 1 million and you are coming for it, and you are not going to pay me everything at once, you decide to say, okay, let me acquire it by hire purchase. I expect you to make a deposit, down payment called deposit. And the balance will be paid over installmental payment. Because you are going to tie down my money, I will definitely add interest. So that interest is what we avoid. It's inadmissible for tax purpose. The interest is inadmissible for tax purpose. So what happens? If this is the case, we adopt these procedures. Where there's a question on hire purchase transaction, which we are going to look at in detail, we adopt these procedures. 1. So procedures. Procedures, this is the important part of it. 1. Are we there? Determine interest element. Interest element. That's the first thing you do. Interest element. Determine interest element. And of course, that has a formula. Interest element is HP price, that's hire purchase price, minus cash price. Minus cash price. HP price minus cash price. Okay. 2. Second thing is determine payment per installment. Payment per installment. Sometimes you'll be given in the question. Sometimes you'll be given in the question. But where you are not given is equals to HP price minus deposit. Okay. Divide by number of installment. Number of installment. You'll be given the number of installments. Installment. That's the second thing you do. 3. Number 3. Interest elements, payment per installment, interest per installment. Interest per installment. That has a formula 2 is equals to, are you there? Is equals to 2, number 1 divided by number of installments. Total interest, as in 1, total interest divided by number of installments. Okay, so that is it. We move on. 4. Capital portion per installment. Capital portion per installment. And that is equals to 2 minus 3. 2 minus 3. Number 2 minus number 3. You know what that means? If you have gotten the payment per installment correctly there, and interest per installment correctly there, net off interest per installment from payment per installment. Next, 5. Determine basis period for capital allowance. Basis period for CA, capital allowance. Are you there? 6. Compute CA, capital allowance. So these are the steps you go through if a question involves hire purchase transaction. And remember, it is the capital portion. It is the capital portion that is granted capital allowance, that we enjoy capital allowance. The interest element is out of it. Is that okay? So, when we go into question and answer, we'll look at the question that will show this. And then, another peculiar thing about hire purchase is that because of the nature of hire purchase, the useful life of the asset may be longer than the expected life. Useful life of the asset may be longer than the expected life. So as a result, we reduce the useful life of the asset each year. After each year. What it means is, another way of putting it is that in hire purchase transaction, all installmental payment and deposit are treated as asset. We look at them as asset on their own. So, everything a normal asset enjoys, initial allowance, annual allowance, it will enjoy it too. But at the point, we will adjust because of the long lifespan of the assets. Okay, I think at this point, it will be better appreciated with a question. We must make sure we work a question on this. So we have come to the end. Everything we need on capital allowance, theoretically. Next time in the class, when we meet in the class, we are going to work at least questions that will buttress all this point. Thank you.